The spirit of innovation is deeply ingrained in America, and Google is helping Americans innovate in ways both big and small. The Department of Defense is working with Google to help secure America's digital defense systems, from establishing cloud-based zero-trust solutions to deploying the latest AI technology. This is a new era of American innovation. Find out more at g.co/American innovation.
Reality radio for a really great future. We're talking real money.
It's Q&A day again. It seems like every week we have a Q&A. I know it's Friday too. Well, but it's not Friday. See, that's why it's Q&A day, because for some of you who listen to it the day the podcast comes out, or just coincidentally on a Friday, it's a Friday. But for some of you, it's like a Sunday or a Wednesday. It's just Q&A day. And today's Q&A day is a bit on the light side. The reason being, I try to maintain enough questions for this week and next week. And I'm going to be a little short for next week unless a new one or two come in. So I need a bunch of new questions at talkingrealmoney.com, and questions that aren't typed. You see, I'm feeling unloved because Tom gets all the typed questions, and those come in droves. The spoken ones, well, they're not as plentiful. And a lot of them are about crypto, and we just try not to do too much of that. So send your questions in. Speak them in at talkingrealmoney.com on the contact form. You just hit the little mic button. It works really well. Or you can type them, okay. Or you can call us on Saturday afternoons, 3 p.m. to 5 p.m. Eastern Time, noon to 2 Pacific, at 855-935-TALK, and actually have a conversation. So there's so many ways to get your questions answered. And we are serious when we say that our favorite part about this podcast and radio show is the question and answer portions. We like enlightening you on other things, but this is my favorite. It's something I've been doing, well, talking back and forth to people on the radio in a talk show format since 1985. Oh my gosh, it's my 40th year doing talk radio. Yeah. My 40th year doing talk radio. Used to do it in Colorado, started on KVOR in Colorado Springs for a period of time, and then got hired by KOA in Denver. And then after that, got hired by Business Radio Network to start doing Money Talk. And from there, of course, you know what's happened. All right, let's get to our first question of the day. This one here.
Yeah, I'm wondering if any of your opinions have changed about cryptocurrency now with the advent of Trump creating that strategic reserve. Thank you very much.
Wait, didn't I just say I don't want to talk about crypto? All right, I'll talk about crypto a little since you're not Bob. No. Oh, come on. Why is the president creating a strategic crypto reserve? Really? You think it's because he thinks crypto is good? He doesn't think crypto is good. He didn't think crypto was good before. He doesn't think it's good now. There's one reason and one reason only: to make crypto people happy. I mean, really. And also to make money on his crypto, because a rising tide, he thinks, floats all boats. And he may be right. But just because you take nothing and you put it in a ledger somewhere doesn't make it worth something. And I know that the marketplace has made it worth something, but it is a marketplace that I do not trust long term, because I stick to the old-fashioned belief that for an asset to be an investment, it has to have some sort of useful intrinsic value. And I don't even like gold as an investment. because I don't think while it has an intrinsic value, it serves no purpose really other than speculation. And that's what precludes anything from being an investment. Anything that is primarily or solely a means of speculation is not an investment, it's a gamble. And I don't think people should put their hard-earned money in gambles. Only investments. So it's not an investment by my definition of an investment because it serves no purpose other than speculation. Now, gold, I guess, could be an investment. I don't like it as an investment, but I could put it in that category because it does have a tangible use case. So I guess if there was a greater demand for gold in manufacturing, for example, as a commodity, its value could rise. But crypto's not even a commodity. It's a nothing burger. It's not even a burger. It's just a nothing. But thanks for the question. And let's do another.
Yes, Tom and Don, I was wondering what your opinion was about REITs, REIT, and if they're a good investment or not. They certainly pay nice dividends. Thank you.
Okay, let's see. We can approach this from two different directions. REITs as a general asset class can be a good thing to have in your portfolio as part of a really well-diversified portfolio. Real estate investment trusts are portfolios of real estate investments. They could be very narrow in one category. They can even be, a REIT can be just an apartment building, for example. So each individual REIT has to be judged on its individual merits or lack thereof. So if someone is pitching you a real estate investment trust, avoid it like the plague. It's like buying an individual stock, although with less clarity and transparency. So avoid any individual REIT being sold to you because generally you're going to be attracted to them because of the high yield. And generally speaking, if a REIT has a really high yield, there's something inherently possibly wrong that could really cause dramatic losses. If it's a yield that's way out of line with the normal yields on corporate securities, then the risks are high. For example, if it's over 7%, then the risks are really high. So avoid that. Now, we suggest REITs as part of a portfolio, but not buying them individually. We believe you should buy a REIT fund or a REIT exchange-traded fund. And Vanguard has a fine real estate investment trust exchange-traded fund. Dimensional has real estate funds. Avantis has real estate funds, all that are well-diversified so that you've got bases covered and you can't lose everything if one goes bad because you've got so many. So if you're going to buy a real estate fund or a real estate ETF, yes, have it as part of the portfolio, probably no more than 10% of your total portfolio, total of the 100%. But other than that, sure. Yeah. Don't buy them individually. That's the only thing. Never, ever, 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 ever buy a REIT that somebody's pitching you. Ever. Did I say never? Yeah. I mean never. Don't. Next question.
I'd like advice on where to put cash for emergency use or for short-term use. You speak of both high-yield savings accounts and money market funds. I have some in Vanguard Treasury Money Market Fund, VUSXX, and wondering if that's an okay one to be in. Thank you.
That is a fine choice. See, you don't even need our help. You're already in the right place. That is a perfect place to store short-term, emergency, rainy day money. It has a current yield. Now, remember, the yield will change day to day as interest rates change day to day. If the Fed lowers rates, that rate will go down. It is currently yielding about 4.5%, which is terrific. It is very safe because it's all invested in U.S. government securities, treasuries, the best stuff. So you're safe. Yield is high. It's a good place for emergency money. Thanks for the question. And if, again, you're wondering how you ask a question, go to talkingrealmoney.com, click on the contact form, and then record your question using the little microphone button. Or on Saturdays, call our radio show on Northwest News Radio in the Seattle area. You can even listen to it live streaming on Saturdays from 3 p.m. to 5 p.m. Eastern, but you can call us on Saturdays at 855-935-8255. And because of the limited quantity of questions in my inbox, this has to be the last one for the day.
Hi, Tom and Don. Brian from Chattanooga, Tennessee here. Love the show, listen daily, and in fact, I think of you two as the click and clat of the financial world. So, awesome stuff, very valuable information, and really appreciate what you two do for the podcast as well as Retire Meet. All good stuff. My question has to do with IRA contributions. So, time of recording is 2025, and I've already done my taxes. So I could actually figure out how much I can contribute to my 2024 Roth IRA because I'm having a good problem of starting to be phased out. And what I want to start doing for my tax year of 2025 is a backdoor Roth. So contribute to a traditional IRA, then convert that to the Roth. My question is this. So since I already contributed in 2025, I've already contributed to the Roth IRA for 2024. Can I still, this year in 2025, contribute to a traditional IRA for 2025? I hope that makes sense. I just want to make sure that I'm not exceeding the contributions limits if I am in the same year of 2025 contributing to a Roth IRA for tax year 2024 and a traditional IRA with a backdoor Roth conversion in tax year 2025. Thank you, and look forward to hearing my question on the air. Awesome.
Chattanooga is one of my favorite places. I love Chattanooga. As a matter of fact, Debbie and I were looking at houses there over the summer. Looking at, I would move there in a heartbeat. She's not as convinced, but we're looking up on top of a couple of mountains at some really nice places. Beautiful town. Love Chattanooga. Chattanooga has really turned itself around. Anyway, IRAs. Yeah, you can make 2 IRA contributions in the same year, whether they're regular or Roth, and so therefore you can make your 2024 Roth in 2024 since you didn't make it in 2024. You have until April, and then anytime in 2025 you can fund your 2025 regular IRA that you're going to backdoor into a Roth IRA. Now, bear in mind that if you have any other regular IRAs, you have to take a prorated portion of those IRAs and move them into the Roth and pay taxes on them if you have others. If you don't, then don't worry about it. But yeah, you are absolutely able to do both in the same year and then do that recharacterization from a regular IRA to a Roth IRA. And probably wise to do it because I can't believe we still have the Roth backdoor. A backdoor Roth just seems to defeat the whole purpose of having income limits on Roth IRA contributions. I'm not sure we should have income limits on Roth IRA contributions because I think all contributions to retirement are a good thing and they're good for the person doing the contributing. And I think they're overall good for society too in the long run. But we're not long-run people. Anyway, that's our last question. I think we've gone through them all. And remember, Saturday, good time to call and talk with me and Tom on our show that becomes a podcast so you can hear it later. And you just call this number, 855-935-TALK, between 3 p.m. and 5 p.m. Eastern time. That's noon to 2 Pacific. And then I usually replay the show on Tuesday and Wednesday or Wednesday and Thursday, depending on what the weekend looks like. And you can also send your questions in at talkingrealmoney.com on the contact form. So I think that covers it. Thanks for listening. And please share the podcast with other people. We are moving up the charts. Thank you. We really are moving up the charts. We're We've been steadily in the top 100 investing podcasts in the country, but we've moved up in the 70s pretty consistently, and now we're getting into the 60s, and that's thanks to you. Thank you for liking it and listening to it and sharing it. Those of you who like it and listen and share it. Those of you who don't like it, I'm sorry you don't like it. It's probably because we said something about something you like a lot and you disagree with us. But can't we just disagree and be civil and still like each other? Thanks for listening. I'm Don McDonald. Along with Tom, we're here almost every day talking real money.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.